Hello viewers, we'll be going over GUSH and DRIP. In this video, we'll be using the day-by-day probability model as our support and resistance gauges, and these models are based on past trends that are similar to the current trend, but not identical, so do keep that in mind. So let's start off with the technical analysis for GUSH. On Friday, it closed below 4.5%. On the 1 hour chart, we have now reached to negative MACD, and we may see the 100 moving average, this orange line, act as our temporary support. If we expand that further to the 4 hour chart, we do see a reversal on the 4 hour MACD. We start to see a divergence in play, and we are resting on the 18 moving average, this purple line. As for the daily chart, what we have here is we have the upper range and bottom trading range, and these trading ranges are based on the day-by-day probability model, up 15% and down 15%. And as we progress to the 5th day, we have a 25-day or 25% chance for GUSH to climb higher between 0 to 15%. And to the downside, we have a 63% chance for it to fall between 0 to negative 15%. And on the extreme case, we have a, say, 13% chance for GUSH to fall between negative 30% to negative 46%. So back to the technical analysis, what we have here, these upper trading ranges and or resistance. We have the resistance that coincides with the 50-day moving average, this yellow line, and that is around a price of $37.22. And we have it coincide with previous resistance that dated back all the way to July 1st and past support levels that dated back to June 19th. And for support to the downside, that price level is around $26.57. We had previous support levels that dated back to May 14th and previous resistance levels that dated back all the way to April 13th. And since we're above resistance, that now act as our support level. Now let's examine DRIP. On Friday, it closed up 4.3% on the 1 hour chart. We have now reached to positive MACD, and we start to see a convergence. The 9 moving average converge onto the 18 moving average, the blue and purple line respectively. As for the 4 hour chart, what we have here is we also start to see a convergence on the 4 hour MACD. And if we expand out further onto the daily chart, what we have here is an opposite sign that we are quite close for the 9-day moving average converging on, or I should say diverging onto the 18-day moving average. So at the moment it is tight squeeze. We do expect a high volatility to be in play as the trading range starts to get more narrow. And these upper and bottom ranges are based on the day-by-day probability model. If we progress to the 5th day or a week of trading, we have a 50% chance for DRIP to climb higher between 0 to 7%. And on the extreme case, a 17% chance for it to climb between 7% to 15%. And to the downside, we have a 17% chance for it to fall between 0 to negative 7% and a 17% chance for it to fall between negative 7% to negative 15%. So these up 7% and down 7% are our support and resistance gauges. And to the upside for resistance, that price level is around $6.03. And that coincides with previous resistance level that dated back from July 10th as well as June 26th, and previous support levels all the way back to May 27th. Since we're below support, that now act as our resistance. And as to the downside, that support level is around $5.08, and we had previous resistance level that dated back to June 15th, and since we're above resistance, that now act as our support level. So in this video, we went over GUSH and DRIP. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.